Hi friends, there is a very interesting report published by Goldman Sachs very recently, and they're talking about 2026 outlook. And what they're saying is that in 2026 we are going to see broadening of this bull market. First of all, what is the bull market they're talking about here? They're talking about in US, basically geography wise US, and from a sector perspective AI stocks, and third is from a factor perspective growth stocks. So growth stocks, which are AI stocks in US, had given massive bull run in 2025. What this report is now saying is that in 2026 the best strategy is going to be diversify. If you go and read the summary of this report, it clearly says diversify across the regions, do not only depend on one particular region, for example US. Second is diversify across factors, do not just go for growth plus value. And also thirdly, do not just stick to one sector, maybe AI or whatever sector you were planning to, diversify across sectors. Diversify. In fact, few days back on my channel, I had created exactly similar line videos talking about why in 2026 I am personally going to diversify my portfolio. And one of the point I talked about that in global markets, I'm going to deploy around 25% of my portfolio. Now, when it comes to investing in global markets, there are 2-3 routes you can take. Number one is that you can invest in direct stocks. Right? It could be listed on US stock exchange, or it could be listed on, for example, UK stock exchange, or whichever stock exchange you like. Second is that you take exposure through Indian mutual funds. I'll talk about that in a second. Third is you take an exposure using GIFT City based mutual funds. And fourth is that you go to truly global mutual funds, that again I will talk about, and also ETFs. There are 4 or 5 different routes when it comes to mutual fund itself, right? Now in this particular video, I have already covered 4 to 5 Indian mutual funds that give you exposure to global markets, right? Now the problem with Indian mutual funds is that right now, because of RBI limitations, many mutual funds are not taking fresh investments. For example, Motilal Oswal, they stopped taking fresh investment into their mutual funds for global portfolio back in 2024, right? This is mainly because of RBI limits. So what are our other options? See, one option is the GIFT City based mutual funds. I'm going to talk about that in a minute. And also I'm going to talk about some truly global mutual funds and ETFs that you can go and explore. All of this for educational purposes. So with that, if you don't know me, my name is Rahul Jain. I'm a full-time investor and a content creator. I'm a SEBI registered research analyst. If you're not yet subscribed to my channel, don't subscribe. Watch this content, and if you learn something new, become a lifelong subscriber to this channel. With that, let me talk about GIFT City based mutual funds. So the first mutual fund that I want you to learn about is a GIFT City based mutual fund. And right now, at the time of recording this video, the only option available is DSP's Global Equity Fund. For this, I've logged into my vested account. And if you go and simply type here DSP Global Equity Mutual Fund, it will come here in your list. This is a GIFT City based mutual fund, the first mutual fund that has come out of GIFT City. Now, I'll talk about that in a minute, but more mutual funds are likely to come in the future from GIFT City. If I try and explain this particular mutual fund, let me scroll down here, and what you will see first of all is the geographical allocation of this mutual fund. United States as of now is around 30%, EU is around 25%, China is around 20%, other is around 14%, South Korea 6%, 5%. So it's not concentrated only in US. It's quite a good diversification that this particular mutual fund is trying to adopt. In fact, I was reading their prospectus, and what they were talking about is that their thesis is that they're going to allocate minimum 65% into the global equity, right? So 65% minimum has to go into global equity. Now coming back to what sort of stocks they are picking up, that's very important for us to understand, because if we are putting our money into this mutual fund, we need to understand where are they investing their money. So for example, if you look at the top holdings here, Nintendo, Puma, Universal Music Group, Airbnb, BMW, these are the brands. What do you think is missing here? They haven't picked up any AI stocks, as you can see in the list, because that's not their theory. Their underlying theme is that they are going to pick up quality companies which are not going to get disrupted by the technology. And here is what I found from their prospectus, that they're saying that we are only going to pick up those businesses that are less prone to rapid technological changes. And we know in AI, technological disruption is happening every single day. So they are trying to avoid that particular theme. Then comes the point, Rahul, in that case, how are they picking up these companies from global markets? So they are following an index called MSCI ACWI, All Country World Index. That covers 23 developed markets and 24 emerging markets. So imagine that they are going to pick stocks from almost 48 different markets. And if I talk about this particular index's return for a minute, if you look at last 1 year return, around 18%, last 3 years around 19%, last 5 years around 12.49%. You can see these return patterns. But these are past returns, do not guarantee the future returns. So how they are going to pick up stocks is that they are going to focus on this MSCI ACWI index. This index has around 3,000 stocks spread across 23 developed and 24 emerging markets. From that list, they're only going to focus on around 400 to 450 large companies which have a market cap of more than $30 billion. And the main criteria for them is that the company must be consistently generating around 10 to 12% of owners' earning. Okay, and this typically comes from 7 to 9% annual profit growth plus 2 to 4% in shareholders payout, which is the dividend and buybacks. That's what they are really focusing on. And also the second parameter is that they're only going to buying the stocks that are going to trade at around 30 to 40% discount to their estimated fair value. So this framework looks very, very solid to me. Therefore, I quite like this particular one. Again, not a promotion that you have to go and invest. In fact, I also want to present you some things that I do not like about this particular mutual fund. But before I talk about the things that I personally do not like, one more thing that you need to know about this particular GIFT City based mutual fund, it is that the taxation part. So here, if you invest in this particular mutual fund and if you make some profits out of it, you don't need to pay any taxes. It doesn't mean it's tax free. It simply means that the fund will take care of all the tax related expenses. How does fund take care of it? So have a look at this. Whenever fund sells a particular stock, they are paying a capital gain tax on that particular selling. For example, if they hold a stock, let's say for short term, which is less than 24 months, they're going to pay 42% of the tax on that particular gain. That is too high. Right? If you look at the long term, if they hold a stock for more than 2 years, they are going to pay around 14.95%. So it's not tax free. If you read on newspaper that it is a tax free, it's not tax free. Yes, the tax is not deducted when the money comes in your hand. It is already deducted for. So from a tax efficiency perspective, one could argue that this is more simpler, that you don't need to deal with the taxes, because taxes could become quite a big problem for people in terms of how do I calculate how much of capital gain is there, how do I file the returns, etc. So that it has taken care. So these are some good things about this particular fund. What are the things that I personally do not like? So if I go back to vested and if I show you some more details about this particular mutual fund, one of them is the minimum investment. So minimum investment in this particular fund is $5,000. Right now, rupee touching all time low, 90 rupees. If I do some simple maths, it might be around 4,50,000 rupees. It is the minimum. 4,50,000 is the minimum amount that you have to invest. I think that is going to rule out a lot of people, in my view, right? Second is the expense ratio. Expense ratio is also 1.75%. It's not very low. So that could be another negative point you can consider. But I've given you both positives and negatives of this particular fund. If you want to go and explore this particular fund, open an account with Vested, you will find some good information there, or you can otherwise go and Google out. You will find a lot of information about this fund. I've given you a lot of details in this particular video. Let me now speak about second types of mutual funds, which are truly global mutual funds. For example, I've logged into my Vested account and I'm here showing you a fund from Fidelity International. This fund is called Global Technology Fund. So if you are still keen on technology exposure globally, then this fund you can go and explore. So what are some of the key facts about this particular mutual fund? So if I come down and talk about this fund's allocation from a geography perspective, heavy US inclination around 59%, Taiwan 9.82%, Netherlands, China, South Korea, Sweden, France, Japan, but it's looking at tech companies in different countries. That's the theme that it is playing on. Look at the companies, sort of companies here. TSMC is the highest allocation, 9.26%. Apple, Microsoft, Forward Europe, which is I think an insurance company. Amazon, Google, some German company that I don't know. Salesforce, Marvel Technology, etc. So these are some of the bets this mutual fund is taking. But I talk about this fund's overall asset under management, $28 billion. It's quite an old fund, started from 2014. Expense ratio is slightly on the higher side, 1.89%. It is based in Luxembourg. So it's a truly global mutual fund. If you look at the returns, last 1 year, 22%, last 5 years, 98%, last 10 years, 510%, because of course the tech has been on the rise in the last 5 to 7 years. That's why very, very solid funds. But if I talk about these funds index here. Which index this fund is benchmarking its returns against? So it is MSCI ACWI Information Technology Index. And this index, of course, has given very, very solid returns in the past. Does not mean that future it will continue to give you returns. And any of these mutual funds you have to consider for long term. You can't really invest in any of these funds for 1 year or 2 years, because these funds may not give you returns, or in fact they might fluctuate a lot because of what's happening in the global world, right? So only explore these funds if you're looking for long-term mutual funds. But coming back to this particular funds index, it is MSCI ACWI Information Technology Index. One of the interesting data that I found about this particular mutual fund is that how it has performed compared to this index. So if you see the orange bar, this is the index, and blue bar is this particular mutual fund. What you note in 2022, when this index crashed almost to more than 20% of drawdown level, this fund did not crash to the same extent. It crashed, but not that much. Same pattern in 2018 as well. If you see here, blue bar here did not go down as much as orange bar. So this fund seems to be less volatile as compared to index, and you see that in the positive returns as well. So whichever year, if you look at 2024, 2023, 2021, the blue bar has given less return versus the index. So it seems to be slightly less volatile in terms of both upward movement and downward movement that you need to consider in your investments. Again, if you go to vested platform, you will find the prospectus here. If you come down here, you'll find the detailed prospectus. Please go and read it, explore this fund, and accordingly decide whether this is good for your portfolio or not. I'm simply stating some facts here so that you learn about global mutual funds as well. And so far, if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to bring such content for you at zero cost. With that, let's move to our next mutual fund, which is also a global mutual fund, but a different geography. Next global mutual fund that I want you to learn about is China focused fund from Fidelity International. So if you're bullish on Chinese market, then this fund can be explored further. If you look at the returns, last 1 year has been very, very good for Chinese market. We all know that, around 25% returns. Again, does not mean that it will continue to outperform the rest of the world in 2026 or 2027. Any of these mutual funds, you have to look for long term and also have to look from a SIP perspective. But again, coming back to this particular fund's allocation here, if I come down here and talk about the geographical allocation, you will see China 82%, Hong Kong 7.99, Netherlands 5.72, Kazakhstan 1.83, United States very limited, only 1.06%. What sort of companies they have? For example, Tencent is there, Alibaba, and you can see all these companies here which are primarily Chinese companies. So if you are bullish on Chinese market, then you can go and explore this particular fund. It's been quite an old fund. 2015 it started, $2.5 billion of AUM as of now. Expense ratio is more than 1%, 1.91%. Now, interesting thing about this fund that I found, I was comparing what is the particular return that it has generated versus index return. So here is some data for you. And if you look at this fund, you will note in the last 5 years. So the dark blue line here you see is the fund's performance. And if you see the light blue line, which is the index performance, last 5 years, this fund has managed to beat the index very, very handsomely. And that is one thing that you need to know about this particular fund. Again, does not mean it will continue to beat it. If you are bullish about Chinese funds, then you can go and explore this particular fund. I also talked about one of the Indian mutual fund in my previous video, which also gives you exposure to Chinese stocks. Go and explore that particular mutual fund as well. And again, it's your choice whether you want to go to the Indian mutual funds or truly global mutual funds like Fidelity. Here, I am simply giving you information. If you want to explore this further, come down again here on Vested, you will find the prospectus. Quite a detailed information is there for you to go and explore about this particular fund. By the way, if you have not yet opened your vested account, I've given you the link in the description and in pinned comments. You can go and open your account now and start exploring these mutual funds, start exploring a lot of global stocks if you're interested in the global equity. Also, I've given you in the link Goldman Sachs, that report that you must go and read about. It's slightly complicated, but I've given you the summary of that diversification is the main theme for 2026. So far I've talked about truly global mutual fund such as DSP from Gift City. Then I talked about the technology fund across the countries that you can explore. Then I talked about the Chinese fund as well if you want to only take exposure to Chinese fund. Then now I'm going to talk about the European markets. So if you go and search about European equity on Vested, you'll find two funds here. One is income fund, another one is European equity fund. The one that I'm going to explain is European equity fund, which is from BlackRock. Now, if I talk about this particular fund's returns, last 1 year has been around only 6.64%. Last 5 years have been around 43% only, because Europe has not given massive breakouts. Doesn't mean that future will be very similar. It really depends whether you want to take exposure to European market or not. If I come and talk about this particular fund's allocation from a geography perspective, it is investing in UK, Switzerland, Germany, France, Netherlands, Ireland, Italy, Spain, Sweden, and Belgium. You can see the current allocation. What sort of companies? Mainly all of them are European or UK based companies that you can go and see here. This fund is also quite old. 2011 this fund started, and it is now at around $1.3 billion of asset under management. Expense ratio is almost 1.82%. And you will note here that all of these mutual funds come at around 1.8, 1.7% of expense ratio. Now, if I talk about this fund's performance vis-a-vis the index, again, this is the data that I have collected separately. And if you go and read about this particular fund's performance, so the green bar here is this fund's performance and the blue bar is index performance. So whenever there has been good returns, so for example, 2019, 2020, 2023, 24, these are the positive return years. Here you will see this particular fund green bar has performed better than the blue one. And whenever in 2022, for example, there was a meltdown here, this fund went down more than what the index did. So this is more volatile than its index. That's what you need to keep in mind. But overall, if you look at the returns, it has outperformed the index that it is tracking, which is a very, very good news in my view. But again, please look at these funds from a long-term perspective. Only look at from a SIP perspective. Don't go and invest in these funds only for a year or 6 months or 8 months. That is not the way to look at these particular mutual funds. So this is a European fund if you're interested in taking exposure to European market. Now, if you want to go and explore more global mutual funds, you can go on to Vested website here and you will find global fund section here. There are a lot of global mutual funds that you can go and explore yourself. You can read about these mutual funds and learn about these mutual funds, and depending on your portfolio, if you want to invest, then that's your choice. I've given you the link in the description and in the pinned comments as well. Go and explore these mutual funds. Also, if you want to learn practically with me, then you can consider joining my YouTube community. A lot of good content I post out almost on a daily basis, and the feedback of that community has been very, very good. It's all about learning for the long term. It's not a trading community. It's all about sharing some good insights from capital market, be it stocks, mutual funds, ETFs, global market, Indian market. A lot of good information you'll find in that community. With that, I hope you like this video. I'm going to see you in my next video. Until then, keep rocking.